Hello guys, good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in these videos we are just making just overall review on the market, what's happened yesterday in the market, what is going on, what kind of the news we have, what kind of the events we had, and their effect on the stock and overall in the financial market. Yesterday, the main event or the news of the day was announcement that White House did about Mr. Biden's nominates for Federal Reserve. As we know, he kind of issued it. He nominated once again Mr. Jay Powell, for second term to be the Fed chair. However, to stay in the middle and support his political political fans and kind of political parties, the Democrat parties. He nominated Mr. Brainerd as the vice chairman. So in this is the way that he could keep both sides, keep the those senators that they wanted Mr. Powell in his place, and the part of the senators that they wanted Mr. Briner to replace with with Mr. Powell. So with nominating Mr. Powell as a Fed chair and Mr. Briner as the vice chairman, so that he could kind of support both, kind of get stay in the middle and to have both parties, both sides. So this is what happened. The main issue was the main news of yesterday. At the same time, on the economic calendar, we had. I will talk about its effect on the stock markets as well on other markets, just like to review what happened first in the beginning. And on the other side, yesterday we had housing numbers. Existing home sale increased more than expected and more than a month ago, which was a little bit surprising because with the shortage that we had in the labor market, with the shortage that we had in the raw materials and energy stuffs, we were waiting to see a little bit. And another thing that we know that the loan rates a little bit increased, the loan costs a little bit increased in the last month. So we were waiting to see a little bit weakness in the home sales. Anything, it didn't happen, and it increased even better than expectations. So we have to think, just like it was a little bit out of the market expectations. It was like increased so rapidly. We were waiting for 6.2 million units to be sold in October, which sold 6.30 some millions. This is what was surprising today. Those numbers, let's go before going to today. See that this is the result when with the better than expected selling, and Mr. Bobble is staying in his place, which it means that we will have same policies to be continued. So continuing the same policy with the better than expected home sales, so it means that the Federal Reserve supposed to follow its way that going to the hawkish policy. So it means that the US dollar will stay in the demand, US dollar demand will increase, and the US dollar, just we could see that its uptrend is continue its way. So US dollar still is uptrend, is a positive. This increasing, I'm sorry, this increasing dollar has put the gold under pressure. As you can see, the gold fell sharply yesterday. Technically, it's in a clear downtrend. From the fundamental side, on the other hand, this downtrend cannot continue so much because because with these policies we can see that money flowed out of stock market. This is S&P 500, SP 500, Dow Jones, and Nasdaq. You can see that the downside in all of them. This weakness in all the stock markets, in all main indices, will flow the money to safe haven. So that means that even with the so much more than expected stronger US dollar, the gold will have demand, and this demand will stop bears and will couple both bears and bulls. So the gold supposed to have some levels around these levels that it is on the oil market. Yesterday oil firstly a little bit increased after the reports that we had OPEC plus, and OPEC and OPEC plus members, they will probably increase the supply if the countries they go to use their reserves instead of buying the new oil. So for the just to have to just to make less oversupply in the market, they told that they will probably decrease. Sorry, they will not. Kind of, you can say better. They will not increase. They plan. So they had the plan of increasing for $100 per day, every day per month. This they're doing every month and every day to reach the pre-pandemic level by year end 2022. So with this new situation, there are the reports that they probably will not they will not increase that 400 bottles. They will probably will pause for for 1 month or two, to just to don't make this oversupply in a market. So let's see that report helped a little bit the oil market to increase. As I told this, using from reserves, from the reserve oils, not just in the US, in China, and to Japan, and now there are some other countries that you're joining. These numbers will not they are not going to just to hold the bears in the oil market. On the other hand, we know that Austria already started to some restrictions from yesterday, 22nd October. And in Germany also, we know that the number of the COVID-19 infected is increasing sharply. If this continue, and if we see the COVID-19 numbers can continue the way, we will see the oil under pressure. On the other hand, otherwise we have too many reasons for increasing the economies in the next months to have the oil still in a higher level. But however, for now, oil is under pressure. Technically, we can you can see the bears. On the other hand, if they can hold this $76, they will continue actually their way in the short term as well, especially as after the reports that we had yesterday about the OPEC and OPEC Plus meeting. About the stock market, saying Mr. Powell in this place, it means that we will see we can probably see more tapering in the coming months, and starting rate hikes. This is what the market expect. This is what the market can kind of. This is what means for the market, the staying of Mr. Powell on its place. It means for the market that we probably will continue. You see that rate raise can start next year in 2022, and rate hikes can go forward, and we can sorry, rate hikes can go forward a little bit earlier, while tapering can probably be more than 15 billion dollars per month, and it may increase even to until 30 billion dollars per month. So this is what market expectations and markets what market need for what means for the market to stay Mr. Powell on its place. So that was the reason that market started to have a little bit downside. On the other hand, this policy, these nominations, the Mr. Powell to stay in his place, for the market means that for the market means that they already know the plan. They already know Mr. Powell's plan. So it's kind of a stability. It's bringing the stability to the market. So people and investors and market participants, they can they can plan for a little bit longer time, as they now already Mr. Powell's plan, instead of having a new person and don't know to. So this kind of added to volatility in the market. So now this volatile will not going to be added to the market. So people already they are stable, and they know what's going on in the market. From the technical point of view, we can see the RSI at the 38 in the H1 chart, in the day trading chart. So we can see still the bears to hold in the market and keep continue their way. In the H4 chart also, RSI at 43 and decreasing OV trend line under the both MA line. So it means that we can see still the downside more here in SP 500. Same thing is positive. Same thing almost for Dow Jones and Nasdaq, also the same. We can see the downside here. On the cryptocurrency market, as we talked the last days, still there are still we can see the downside risk here, and not just for the Bitcoin, for Ripple as well, for Ethereum as well. We can see still the peers, they're moving the market. They have the control of the market, and for this weakness can still continue. For now, we don't have any reason or evidence that to see that the crypto market to start increasing. So the decreasing and lower numbers still it's what we are expecting for today. And In a in a currency market, you can see the euro USD. Euro is a little bit in a weaker position situation, weaker situation. However, today is the PMI day. That's what I wanted to talk today. We will have very important numbers from Europe. Already we had the PMI Purchasing Manager Index number from Australia. They were a little bit better than the month ago and increased from 50 manufacturing. Let's go to the manufacturing. Yeah, the manufacturing increased from 58.2 to 15.5, while retail sales decreased sharply in New Zealand. New Zealand retail sales in a quarter three in a quarter three fell by 6.7%, while in a quarter three comparing for the 6.3% it was a decreasing in New Zealand. It was amazingly surprisingly negative news for the New Zealand. That's why probably we can see start we probably see that because the power of buying in the people decreased, so because of inflation. That means that the central bank is supposed to do the hawkish policies. So later in the day we will have like in 2.5 hours, we will have German GDP numbers, and then we will have the manufacturing numbers from French, from other European countries, Italy, and other European countries totally, and Eurozone manufacturing for the both composite and market numbers, and then UK manufacturing numbers will be in the spotlight, and later in the US stock, in a North American season, we will have the same manufacturing numbers from United States, and we have to follow the numbers. And later, the German Buba will have his probably his one of his latest speeches before he leave the central in German central bank. And same for other speakers from the European Central Bank. So today, the main focus will be and a purchasing manager index or manufacturing purchasing manager index for the manufacturing or purchasing this is like a manufacturing purchasing manager index, let's say like that, or in a short, PMI numbers, manufacturing PMI numbers today will be in the spotlight, while the German GDP also shouldn't be forgotten. So these manufacturers, what I was talking about, these manufacturing numbers and GDP numbers from the Europe is if they become a little bit better than expectations, which is not quite market expectations. Probably we can see even the weaker number from the Europe. However, if we don't see the stronger number, this year USD downtrend can continue its way, while weakness in a number, the weakness in a number can hold this bearish here in the chart. However, if we see, unsurprisingly, if we see the better than expected PMI numbers in Europe, we can see this Euro USD to increase a little bit from these levels, which is, as I told, which is a little bit out of expectations. The market expecting to see the bigger PMI numbers. Things a little bit, actually a little bit different for the pound in overall. Overall in the short term, that it was a little bit different for the pound in the short term, but the overall downtrend of the overall downtrend in the pound also is still in the market, is continuing its way, same as the Euro USD, because we can see very much better than expected GDP uh, numbers in the United States, while the other economies they are weaker. At the same time, increasing hawkish policy possibility in the banks, in the central banks, it will add the demand for U.S. dollar. Demand for U.S. dollar increasing, it means that GBP USD still will be in a downtrend. And we can see the USD JPY in a new record since when I can say that's the last time that we saw these levels. I don't even remember when it was. It was like years ago. This is the highest level since 2017. So this is the record that we can see. The last time we saw that numbers on March 7, 2017. So it's in the highest level USD JPY since its highest level since March 2017, and this uptrend still continue because of stronger US dollar that we have. So From the technical point of view, in H1 and H4 chart, in all of them, the RSI is still in uptrend, and RSI is 50, so it means that the uptrend has power to continue. OBV trend line and everything, all the evidence we have, they are still supporting the USD JPY in the midterm, same as in the short term. Alright, so this is the general market expectations as market view. So as I told today, the main focus will be on the PMI numbers. Hope it was useful for you guys. If you have any idea, please make a write in a comment and let me know what you want exactly, what you exactly expecting me to cover in these videos and explain for you. Thank you so much and have a good day. Bye bye.